Hello. Gift from Aquarius. Yeah, I see you. You're welcome to the live stream. The dollar is still awake. It's wonderful to have you here. If you're here, you can drop a hi in the chat box. Steven Asante, yeah, I see you. Hello. Yes, Crash 1000 dropped just as we talked about yesterday. There was a massive series of spikes. I told you guys it was going to drop. It was approaching the third support from yesterday. Massive drop. So let's take a look at Crash 1000. Do you see that? I told you if it breaks this support line, it was going to spike a lot. And that's what happened. This is it. And once it broke it, it was a massive series of, and it's still spiking. It has all these places to spike to, but don't enter a sell yet. Okay, because if you take a look at this now, this is, it has broken support 3, support 2, and it's approaching support 1, but then it's going to retrace for a while before it gets here. So if yesterday you went for a sell, you are in massive profit today. Yeah, so the reason why I shouldn't enter a sell right now is because it will get to a point the market will retrace and then spike again. But as of now, I would say you should have entered a sell when support 3 was broken here. And I don't know, so many people are missing the vital info we are sharing on the live stream. They feel like the live stream is already past, so I'm not going to watch it. But when you watch it, you can capture certain things we've spoken about, and pick more profitable trades. Yeah. So Gift, you are now ready to trade this boom and crash. Steven, how has your trading been going? I hope you are being profitable. The end goal of boom and crash is to be a profitable trader. For me, I've been a profitable trader. Yes. So if you are live, if you join us, boom and crash TV, send a hi. Let me know. So let's quickly look at the analysis. Okay. So because this hasn't completely formed yet, so let's switch to M15 and see. There's a slight retracement here. So if you don't know how price has behaved in the past and you see this, you're going to go for a buy because you feel like there's a lot of spikes. So if I go for a buy, I'll still be safe. But then there are more spikes on the way. There are more spikes on the way because support 2 has also been broken. So a good entry for a sell point was somewhere here. Now this is very long, so a good sell was here. A good sell was here. You see that? A good sell was where the first candle was closing. Then another sell point was here when the support 2 was broken. Another sell point was here. So sell here, sell there. Kinvolo, hello, you're welcome. So when you watch H4 is still going down, Yes, do you see this? This is a massive candle. This is a massive one. H4 is still going down. Yeah, so it has all this space to cover. Do you see? It has all this space to cover, because this is our third our main, our first support, our S1 that we drew. Drop the way down to the demand zone. Yeah. And this is where, if you do not do your analysis rightly, you would see something like this. You see a trend going this way, and you'll be like, okay, let me enter here. Let me enter here and buy with the market, because it's buying. I won't join the trend. It's not always safe to join the trend. Let me sip my juice. Good. It's not always good to join the trend. It is better to join a trend early than to join it late. When you see a trend going and it's late, don't enter. It's even safer to enter in the opposite trade. So we see Crash 1000 doing its best, having all this room to spike. Now there's going to be some retracements along the line, but eventually it's going to go down, because our first support line that I drew still has created more room for spikes, because we have a massive uptrend from here to there. Do you see that? Let me make this thicker. Do you see that? Let's take a look at Crash 500. We might come back to this. Let's see what's here. So Crash 500 is actually one of my personally one of my worst markets. I think most of the time I have bad experiences with Crash 500. I don't know why that happens, but that has been my nightmare. And I think my most favored market has been Boom 1000. So Crash 500, there was something happening here. There's something that happened here. Let me switch to H1. So we're in an uptrend now. We had a support broken somewhere. Where was it? Here. A support was broken here. Point A. And then point B. Point A, point B. This was a support, and this was broken. So at this point, or midway this candle, this is H1. So midway this candle, or the opening of this candle, was a good sell. Why? Because the support was broken. So sell there, put your TP somewhere here, not too far away, because it can retrace and not hit your TP. Good. So after a while, eventually, when it breaks the support and it goes down, eventually it's going to retrace again. So when it goes down and you see higher highs forming, from here, you enter a buy. When you see that, then you enter a buy. I hope that makes sense. Yeah. So that has been the happenings on Crash 500. So we are coming from a massive, downtrend. Eventually, what's going to happen on Crash 500? Okay, eventually in the coming days, there's going to be a long upward trend. There's going to be a long upward trend with very, very few spikes, and that is when you sell on Crash 500, you're going to be in trouble. Okay, so in the coming days, if you sell on Crash 500, you're going to be in trouble. Now, let me give you a tip on the crash markets, both Crash 500 and Crash 1000. What happens is that at usually around 11 p.m. to 2 a.m., that is GMT plus 00, there is always a trend. There's always a long trend on the crash markets. There's always a trend on the crash markets. Yes, so that's now one of the reasons why I entered a buy rather here, okay, and expected the market to turn and went down to break the support was that it was coming from a very high slope of sales, and then it consolidated here. It consolidated here, so I was expecting a buy here because it was coming down and then it consolidated. So the best thing was what, to move upward. Exactly. It's better, Gift from Aquarius says it's better to just swing trade the 500s with small lot size. Yeah, so I'm using small lot size. That's why I mean even close my trades. I'm using 0.25 and I have three buys open. You see, so but I'm more confident going on Boom 1000 with a bigger lot size, because somehow I just feel comfortable on Boom 1000. Let's look at Boom 500. I think these were the things I did yesterday. These were the stuff I drew yesterday. Let me delete my stuff, delete everything. Okay, let's see what's happening here. This is Boom 500. Okay, so first of all, we see a support. There's a bounce off from here. It's a bounce off from here, but usually someone would say, okay, it has been coming from the bottom, so I'm going to sell, right? And then the person probably enters a sell somewhere here, and then it spikes. What happens? You're in a loss. Usually what happens with newbies or people who are new to Boom and Crashes, they just enter the market, see that there's something nice going on, candles forming, and then they automatically join the trend. So they are afraid of spikes. They always get caught by spikes. And I know people who when they are trading, they take 2 cents per trade. 2 cents. Once the trade enters a profit of 2 cents, they take it because they're afraid of a spike. That way, if you trade that way, you are rather harming yourself, because if you go for 2 cents, how many cents will make $1? You have to pick 50 trades to even be able to make $1, right? So if you're caught by a spike and you get minus $4, how many trades are you going to take to recover? You get it? So it's even more dangerous to outsmart the market, in quotes, by taking a 2 cents profit per trade. So currently we have a support bounced off here. Then we'll go back. We have to zoom backward and see what's happening. Then we have another support here. Do you see that? Then we go back again. Then we have another resistance here. Now, one of the things you want to do with trend lines is you always have to extend them into the future. This was happening. This was happening. Do you see? So first of all, when you enter a market, when you open the chart, try to find the closest support or resistance. The closest support or resistance. Okay, then you zoom out, look for another support or resistance, then zoom out again, look for another major one, all on the H1 time frame. Then when you're not convinced, you move to H4 to see what's happening. You just have to have a broader scope. It's like sitting in an airplane and flying over a city. You need to see where the river runs. You need to see where the buildings, how the architecture of the city is designed, how settlements are placed before you be able to take on large projects for the community. So, or you so from here we have 4 lines. We have a resistance here, we have another resistance, we have two supports, two resistance. Then I zoom in, then I say, okay, now sometimes you would also have to look for a triangle. I have to look for a triangle. Where is the triangle? The triangle is here. So we have this support, then we have another resistance here. So I call this the triangle formula. I'm going to take this one, bring it here, and bring this here, and eventually I have my triangle here. So price is within this triangle from point A, point B, then point C. So what next? What's next? After we've done this, we have a triangle. Then we need to wait for price to break either line BC or line AC. Price needs to break line BC or line AC. When price or when the candlesticks break BC, what are we going to do? We are going to buy. And when price or the candlesticks come down and break AC, we are going to sell. It's very, very simple. This is what I did on Boom 1000, and I was able to get some profit. Let me show you what I did on Boom 1000. So we'll come back here. Perhaps this is what I did on Boom 1000, and I was able to fish some candles. I'm on price time frame 15. Yeah, 15. This is what I did on Boom 1000 this evening. Was it H1 I used? I think it was M15 I was using. Okay. Now these things will make sense on any time frame with the exception of, say, M1 and M5. All others would seem to create, more weightier support and resistance. So I have support here. Then I have, now before this formed, I had a resistance here because these candles were moving down, so I had a resistance here. Okay, this is what I had. Then I drew this to create my triangle. So price was within my triangle. Then it broke. What was I using? Was it M15? Yeah, it was M5 rather. I think I had my resistance here. I had my support here. So immediately on M5, this line was broken. This line was broken. I went for a buy and I took 2 candles. So I entered a buy, and I did what? And I TP'd somewhere here because I didn't want a retracement to prevent me from taking my profit. So I entered buy after this. Let me switch to M1. So this is where I entered a buy. After this spike, I set a buy limit, and then it spiked. Then it spiked again. So my TP, it hit my TP, and it closed. And I think I had about roughly $5 because I went with a small lot size. Free $5. Yeah. So try as much as possible to always find your triangle, always create your triangle in any market at all. Now I'm going to switch to volatilities, okay, and we are going to use this same triangle formula to see whether we'll be able to take some profit on volatilities market. Just to compare what we are doing, let's see whether our stuff is working, our secret is working. From any point at all, let's see whether we can create. Okay, now these candles have already formed, so let's go into the past and look for any point where we can create a triangle and see whether it will make sense. So let's do Let me switch to M15. Okay, let's do this. So we see a clear resistance here. Then let's go back. We see a support here. So this is what we have. Then we create this. Good. So from here, now price is moving from here, comes to bounce on our support, goes up, then it breaks this, because mind you, you've already drawn a resistance because of this point A here, and this point B here. I'll put this here, and I'll put this there. Then we have point C. At point C, there's a break here, so from here we can enter a buy, and then we TP not so far away. All right, now when we TP here, we can also, now let's say the price is currently at this point, so what we do, we look for a new support. Okay, then we look for a new resistance. We have a new triangle. You see that, because price is coming down, so immediately we form a new resistance here. Then we create our triangle. Then we look for where our one of the points is broken, which is here. Then we go for a sell. Here we go for a sell because it's broken. Then I put my TP here because this line is broken, the triangle is broken. But at this point it gets back and hits our support and becomes a new resistance. So this support will become a new resistance. But the positive part of the whole thing is that if you have huge enough equity and you sell here, you are not scared. You are not scared when price retraces, because your equity is okay. Maybe you have $100, least maybe $70. You are not so afraid with a small lot size, 0.001 on volatility 75. You are here and you are sure, because you know that per analysis, once your triangle is broken, it's going to sell. You are sure based on that analysis. So if you are sure and you stay here in a sell, eventually it's going to retrace down, then it hits your TP. When it hits your TP, you have to start looking for a new area to create a new triangle. So immediately it hits your TP here. Now price is here. Okay, so I'll delete everything. Then now let's say price retrace and it hits your TP here. So price is currently here. We don't know the future. Let's assume we don't know the future and price is currently here. Let's assume price is currently here. What are you going to do? You are going to find your new resistance, because there's a first bouncing point. There's another bouncing point. So this is a confirmed resistance. Then you have to look for a support, because those two can help you create what? A triangle. So we have to look for a support. Now our support would be this still, because there's no close support enough. So first your support was here. Your support was here, right? And it broke this and you sold here, and then it retraced. First your support was here, but now your support is here. So this was your S1, your first support. And this is your second support. So this is your first support and your second support. So this is your new support. So now I'll delete support 1. And I'll zoom in. So what do we have? Oops. Now I'll connect this to this. There's a new triangle. There's a new triangle. So from here, price is here. price is here, right? Okay, so this is where we TP it. Yeah, I was getting confused. This is where we TP it. So it seems from here our support hasn't been clearly formed, because if the current market price is here, it means that the support hasn't been clearly formed. Okay, so after TP, then we'll have to wait for a while. Then we have to wait for the support to clearly form, because what we only have clearly being formed is the resistance. So we would have to wait for a support to be clearly formed. Now let's say we wait for a few more. This 15-minute time frame, so we wait for 1 2 3 4 5 6, which is 1 hour. Then there's a new support forming, because price has moved up. We don't know the future yet. We are still assuming we don't know the future. So now a new support is formed from here. Okay, from here to there, a new support has formed. So we have to wait, because we had a confirmed resistance. Now we found a new support, because there's a long green candle here showing us that the market has gone up. It has bounced off. So we are waiting for either this resistance line or this support line to be broken. Once this is broken, what happens? We sell. We sell here, and then we do what? We TP, not too far away, because of retracements. Do you see that? So once it hits here, you begin to look for a new means by which you can form a new triangle. I hope it makes sense. Please, do you have any questions? Yeah. So always look for ways and means by which you can create a triangle, and wait for it to be broken. So let's look at this M15 still. We found a resistance here, then we found a support here. Okay, you see where price is. Let's close the triangle. So we can predict where volatility 75 is going to head when the triangle is broken, and in the morning we can confirm on our Telegram page whether we were right. So it seems it's going to sell. Volatility 75 is going to sell on 15-minute time frame. It's going to sell. Most likely it's going to sell. So let's keep in mind the price level. It's not yet broken, but I'm just placing this the price level 960,535.36. If it breaks this and the next candle opens, and the candle after the next one opens, then we can confirm a full break. Then we know that it's going to sell. Very, 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 very simple. Okay, Gift from Aquarius says, what's easier to trade, VIX or step? I think it's virtually the same, but a step, I think I prefer step to volatilities. Personally, step is also easier to calculate because the least loss size is 0.10, which is 10 cents. To immediately enter a buy or a sell, it's 10 cents you are earning. So if I come here, and I place a buy, it's 10 cents. You see that? 10 cents. Sell, 10 cents. Every tick is 10 cents. So it's very, very easy to calculate how your profits move. Very, very easy to calculate how your profits move. That's for step index. Yes, so back to boom and crash. I think at this point I'll wrap up if there are no questions. Aquarius says MetaTrader doesn't show the bulls and bears market like the D trader. Also a good a good market to daily scalp. Yeah. It's not included. They don't include it on the MT5. I don't know what's going on. Maybe in the future they're going to add it. Let's see whether we can find it. No, it doesn't show. It's not part. It's not part. Yeah, so I think I'll wrap up shortly. Now this looks like a sell on Boom 500. This looks like a sell on Boom 500, because looking at it from here, we have this. We have our resistance here. It could spike some more. It could also sell. Then we have this. What do we have? We have a triangle forming. Then we wait. We wait for the triangle to be what? To be broken on any of the sides. Very simple. Thank you, Aquarius. Yeah. You're welcome. Yeah, jump index, it jumps. Jump index jumps when price moves for a while. What's happening to my... What's happening to my chat? I don't know whether it's I think it's the internet connection. Okay, so jump index tends to jump after it moves. It moves like volatilities for a while, then it gets to a point, it jumps like this point. Let me zoom in. Do you see the jump? So price moves for a while, then it jumps, moves for a while, moves for a while, then it jumps, moves, jumps, moves, jumps. Do you see that? It looks like a spike, but it's not a spike. What happens is it moves faster, so it looks like it's a spike, but it's not. It just moves faster. This looks like a spike. It just moves faster within 1 minute. So you see M1, it looks like a spike, but it's not fast. It just moves very fast. I mean, it's not a quick spike. It only moves very fast within 1 minute, like this. So there's a jump here. There are little jumps, there are medium-sized jumps, and there are large jumps. So this is a jump. This is a jump. And this is also a jump. Yeah. Any other questions? So if you have a good enough equity, you can actually stay in the market for a long time, because most of the times we are confident with the market retracing back into profit, but we are less confident when it comes to staying in the market for a long time and accruing heavy profits. We are less confident. So I'll bring my stream to a close. The dollar is awake once again. You're welcome to a wonderful live stream. The dollar will always be awake while you're sleeping. Always. See. The market is always alive. The dollar never sleeps. The dollar never sleeps. It's always awake. as you are sleeping right now, the market is moving. The movement of the market in itself is dollars. It's dollars. So let's try to be alert, be alert when the market is moving, so that we can take advantage of the movement and make some dollars. Yeah. So thank you very much for joining the stream. Share this video with your friends and let them learn something new about market analysis so that they can minimize their losses. So thanks very much for your time. I really appreciate it. You all make this channel grow, and I really appreciate it. Thanks for the subscription. Like the video and share with your friends. So at this point, I'll say bye. Yeah, Denston. Yeah.